Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how I made over $4,600 from swing trading stocks this past month. So I hope you guys will enjoy it. If you do, smash that like button, subscribe. And if you guys want to learn how I find these stocks, our strategies, our approach, everything, our insights, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat. It's like a college class. It's 8 weeks long. It's self-paced. It's constantly updated. It's absolutely fantastic. Lifetime access. And we have an awesome sale going on for 51% off using code SPRING25. So if you want to elevate your trading game, if your goal is to quit your 9-to-5 job and become a trader, check out our school. That's all I'm saying. I was a project manager. Now I am living my dream swing trading stocks. So guys, I hope you guys all enjoy it, and let's jump into this here. So one of the things I want to talk about is the statement I just said. It's glorious, right? Yeah, swing trading is awesome. I personally love it, but it does require a special someone. What I mean by that is somebody that's willing to put in the time, the effort, and understand that trading is not easy. It's not a get-rich-quick scheme. And some of the profits that I'm going to be showing you guys today, use it as inspiration for you guys to become a trader and a swing trader. So let's jump into this here. So the first thing that I always do here is review my trades every single month. I think it's super important to review stocks that did well, stocks that could have made me more money, and just learn. You know, the second you think you know everything from trading, that's the second that the market's going to take something from you. So right now here, this past month here, this is our trading journal here. If you guys want this, I'll put it down below. But we made $4,615.37 this past month, which, guys, well done. Well done. Yes, this past month has been choppy. It's been volatile, and we're still in on a couple of our positions. But overall, I'm still very, very happy with that because, you know, profit is profit, whether it's $1 or $4,000. So let's look at the best stocks here that we traded here. So the best ones that we traded was GILD, which we're continuing to hold. We're up about $1,000 on that. We traded Meta, Nvidia, and we're actually still in on VU for about $400 here. Now, the best approach here from this past month here was the breakout approach. So going into the next month, obviously, we're going to continue to work on this strategy here because it's performing very, very well. I do think a lot of the sell-off stocks here that we're in on are going to get buying pressure. It's just going to take a lot longer. And don't worry, we'll show you guys that. So the next thing I want to show you guys here is the strategy. So the broker I use is Moomoo. I'll put a link to them down below. They're the broker I love and I recommend. They're honestly just awesome. And you guys can get up to 30 free stocks just by signing up with them. So it's a win-win. So when you guys trade, you don't just buy random stocks. That's a huge thing that I had to learn when I first started. I thought traders would just buy random companies and you would just make money. Obviously, that's not the case. You know, over the past 7 years of trading full time, you know, one of the things that helped separate me from other traders, in my opinion, was journaling. So doing that little thing, like I just said, of understanding the strategy that's working well, I can narrow in and focus on stocks with that strategy. So with that here, the first thing I look for is a stock on an upward trend. You know, with this stock here, we've seen, you know, the buying pressure at about $60 all the way up to $120. So really, really good buying pressure. We also have this yellow line, which is a 50-day EMA line. You guys can see in the past it hit it and what happened? Buying pressure. Hit it, buying pressure. So recently the stock sold off down to that point. Now you don't just buy it at that line because the last thing you want to do is buy it there and then see it continue to sell off, kind of like it's done in the past. Just because moving average lines, you know, they're not 100% for certain. If they were, everybody would be making money. So after we had the sell off down to that line, the next thing I look at is the RSI, which is a kind of another technical indicator. It's a momentum based indicator. And at the time here, it was trading for a 38. Which the last time it was trading for a 38 was back in this range where it hit that yellow line, that 50-day EMA line, and we had good buying pressure. So let's go over this again. We have a stock on an upward trend, sold off down to a support line, which is a moving average line. It's undervalued on the RSI. The next thing that I do is I go from the daily to the hourly time frame. So now each candlestick represents 1 hour of trading instead of 1 day. And you guys can see just this general downward trend here where it was just hitting this trend line. So what we did is we threw an alert right above it. And as the stock's selling off, our alert's just going down with it. Okay. Then we had this huge breakout where it popped up above this, that trend line. And that was our entry price. Entering here, we got in near and around 107. So it's not the low, where we could have got in at 104. It's not even the low of the day at, 106, but still 107 is a very, very good price. So now on average here, what I always do is if it's relatively close to that breakout, I will keep my stop loss below this, down in here, below 104. So if we do get a dip down, we're risking about 3% to possibly push the stock up higher, which would be up to resistance at about 119 here. So we're risking about $1 to make $3.40. So the reason why doing that in risk management, which we're kind of planning out our trades, is so incredibly important here is because if we're starting out with a small amount of money, whether it's $100 or even $1,000, imagine we find a stock like this, 50 times over the course of a year, risking 3% with a 3.4 risk and reward. Now imagine you're 50% of the trades you take, you win, 50% you lose. At the end of the year, you've grown your account to $5,200. Now imagine 40% winners. You're still doubling your money. 35%, right? So as you start understanding risk management, it's really not so much about your win-loss percentage, because if you have a good checklist and good indicators going in your favor, all that stuff will naturally happen. So what you want to do is really focus on your risk and reward in your setup. So that's why having and waiting for confirmation is incredibly important here. So this was the strategy that worked well. We also traded NVIDIA this past month here. Very similar approach, right? If we look at it, we can pull up these moving average lines. This one here was a little different. It sold off like crazy, and just this was a sell-off based and breakout based. So you can see this general downward trend, breakout above it, rallying its way up, exited on the breakdown of that trend. So as it dipped down below that trend line, we got out, and it just continued to sell off. So as a new trend forms, we could find another opportunity to get in on that position. And that's why understanding your checklist, your strategy, and all that stuff is incredibly important. So if you guys want to learn more about trading, check out our school, because you guys can get 51% off by using code SPRING25. And don't forget to sign up with Moomoo. You guys can get up to 30 free stocks. So it's completely worth it. I'll see you guys in there, and I hope you guys enjoyed it. Smash that like button, subscribe, and take care, guys.